Welcome everyone to the third annual conference of Harvard Law School Blockchain FinTech Initiative. This year we'll have 5 panels featuring distinguished speakers from a wide range of areas. We have legal counsels, investors, judges, lawyers, professors, scholars, and truly all experts and pioneers in the area of FinTech. And for our keynote session right now, we're so excited to have Marco and Georgia joining us. Marco is the Chief Legal Officer at Kraken, and he's a recognized authority in the law and policy of blockchain technologies. In September 2020, the state of Wyoming has approved Kraken's application to form the world's first special purpose depository institution, also known as SPDI, called Kraken Bank. We're going to talk a lot about the SPDI charter today. And Georgia is the General Counsel of Anchorage, the premier digital asset custodian and financial services platform for institutions. Prior to that, she was the General Counsel of CoinList and is also the co-founder of iDisclose. Earlier this year in January, Anchorage has become the first cryptocurrency company to receive a federal charter from the OCC, another charter that we'll talk a lot about soon. So today we actually get to hear from the true pioneers of crypto bank charters. And to all our audiences, during this panel, feel free to use the Q&A function to submit questions to our panelists. At the very end of the panel, we will select a few questions for Marco and Georgia to answer. So now let's get started. So why don't we start with just having each of you telling us a little bit more about yourself and what Kraken and Anchorage does. So why don't we start with Marco?
Sure. First of all, thank you for having me. I always love doing these things with Harvard. It's always a high level discussion. I'm the Chief Legal Officer at Kraken. Kraken is one of the largest digital asset exchanges in the world. I think the best, but I'm biased. We are the recipients and we're deeply involved in the creation of the first SPDI charter, the special purpose depository institution in the state of Wyoming, and it's the first of its kind in the nation, first of its kind in the world, really, and it is, I think, a terrific fit for Kraken's business model. We considered a number of different licensing strategies and chartering strategies. At the end of the day, Wyoming was the best fit, and we were lucky enough to be involved in crafting it from the outset.
Great, Georgia.
Thank you, and yeah, I just want to start by thanking you and the student body. Really, you've organized a great event, and I'm really happy to participate. So my name is Georgia Quinn. I'm the General Counsel at Anchorage. We're a digital asset platform for institutions, and we offer several services, including custody, settlement, staking, brokerage, lending, all through our various subsidiaries. This whole event is about firsts, and as you mentioned earlier, we are the proud recipient of the first federal charter for a digital asset banking institution. For us, it was just a real historic moment to have an entity like this and be able to undertake this process with the OCC. And I'm really looking forward to kind of sharing what that process was like, and just kind of the unique nature of the whole undertaking. But Marco was noting how he really feels that the SPDI works for the business model that Kraken has, and we similarly feel that this is the right regulatory regime for us. And as Marco has done as well, we've tried other things. We've tried many other avenues, and we just feel, and we'll get into the details of this, but we do feel that this is the right path for us with respect to the services and the clientele that we have. And so I'm really just looking forward to getting into the details here, because as a cutting edge sort of movement, this this is really, the details are really where we're gonna, find the learnings.
Yeah, and we are also very excited to have you here and to learn more about the SPDI and the federal charter. So Marco, on a high level, could you tell us a little bit more about what exactly is a special purpose depository institution charter?
Yeah, absolutely. So like I said, the charter was created just recently, and we're the first recipients of it. The charter is based on a state bank charter, which is the same charter that State Street, for example, has the large custodian banks in the U.S. But it is limited in purpose, just like all of these sort of new wave of charters are limited, and it comes with trade-offs. So there are greater freedoms under this charter, but there are also greater limitations in other respects under the charter. So to lay it out, the charter permits some very important things for the company. It permits deposit taking. Deposit taking is not something that your typical crypto exchange does. Your typical crypto exchange takes custody, which is to say possession and control, but not title. So if you take custody, if you take possession and control, you're generally speaking taking custody. That's what the Coinbases of the world do. It's what BitMEX and Binance and all the rest of them do. But they don't take title to those funds. That in the banking world is generally referred to as deposit taking. And that's something that we can do under the SPDI. It is something that's permitted both in crypto and in fiat. So the SPDI charter permits us to apply for a Federal Reserve master account, meaning we can have our own account at the Fed where we can hold the user's funds under our own name. It also gives us access to the national payment system, which is, quite frankly, the thing that has been holding back this industry and this technology from integrating more effectively with the rest of the world and with legacy finance since the beginning, since 2011, since Mt. Gox messed it up. Because companies, crypto companies, exchanges, payment processors, everybody else has been reliant, and entirely reliant on the functionality of existing legacy banks to move funds between traditional finance and crypto. That reliance, doesn't exist with an SPDI because we would have access to Fedwire, right? We would have access to the clearinghouse, ACHs, wire transfers. We wouldn't have to go out and find a bank and keep a bank happy and abide by their risk tolerances, which is set by their business model and all of their other clients. We can set our own. That is incredibly powerful, but there are limitations. And look, I'm just summarizing here at a high level, but the major limitation is that we will not engage in fractional reserve lending. Now, there are philosophical objections to engaging in fractional reserve lending and rehypothecation. I understand and respect those. I frankly haven't gotten all that deep into it. I do know, and this is what makes it a good fit for us, which it makes the trade-offs appropriate for us. We don't want to engage in that kind of business. We don't want to be forced to lend. Full bank charters not only give you the power to lend, they obligate you to lend. And that is not in our business model. So that's at a high level why an SPDI makes sense for us, and a national association or a full state bank didn't make sense either.
Yeah, sure. Thank you so much. That's very helpful indeed. And later on, we'll get more into detail about why that's a great fit for Kraken. And for now, just Georgia, could you tell us a little bit about on a high level, what is an OCC National Trust Bank Charter?
Sure. So a trust bank charter is a variety of a federal banking charter, and it basically has, kind of similar to what Marco was saying with his SPDI, it has certain powers and permissions, but it's limited in scope to what a full banking charter would allow. Importantly, our charter provides for full fiduciary powers. So we can do, really anything that is acceptable under, federal fiduciary powers. But importantly, like with all prudential regulators, the way banking laws work is you don't just get like free reign to do any old thing you want to. You apply and you provide a business plan, and your business plan sets forth all of the different services that you intend to provide to your clients. And so Marco's business plan does not have lending in it, right? Our business plan does not have deposit taking in it. And we then get permission to do what we say we're going to do. And then to the extent we ever want to materially change that, you have to go back to your regulator and explain the change in business plan and then get approvals to do those additional services. And so again, we have, it's a federal trust charter. And talking about fit and why, for different business plans, this is the right fit for us, is it was really important for us to have federal preemption of state banking and money transmission laws. We're operating in an ecosystem that is not bound by, frankly, state or national borders. And so every time we were trying to engage with clients or provide services in a different state, we would have to do like an individual state analysis. Do we get reciprocity as a state chartered trust? Are we conducting money transmission based on our services? And it just was, and then, to the extent the answer was yes, we'd have to go and apply in that state and get the appropriate permissions and then do all the individual reporting requirements and everything in those states. And so that was very, very burdensome for, a frankly global operation. And so what having the federal trust charter allows is state preemption of those, or federal preemption of those state banking laws. And so any of the activities that we are legally allowed to do under our federal charter, we can conduct in any state or territory in the US. And that has been, just a very important aspect of this whole process for us. Other reasons why this really fit our model versus other business models are that our clients are not retail clients. Our clients are institutions. Frankly, our clients are banks. So banks like to do business with people that are, or with entities that are regulated on the same level as they are. So it's very convenient for us to be able to talk to our potential customers and say, look, we're regulated by the OCC, you're regulated by the OCC. You don't have to worry about us, living up to the appropriate levels of compliance because it's already mandated for us. So you're not going to be constantly looking over our shoulder, wondering if we're doing things right. So that was, that's another really important part about, again, this is about fit. This fit our business model. And then similarly, we are members of the Federal Reserve. So we do, own Fed shares and we're party to the system. And to the extent we would want access to Fed payment rails or, other sort of benefits, we can ask for permission. We don't have that now because for us, we don't need access to those rails because we're partnering with institutions that already have that access. And so, we're just coming from it at a little different angle than, other institutions. And I think that's going to be the resonating theme of this panel is just, different strokes for different folks. And, it's great that we have options out there where, entities can find the best regulatory framework that works for them.
Great, thanks. And on that note, now that we know what these two charters are, Marco, could you tell us a little bit more about, why did Kraken apply for SPDI charter and what does getting it mean for Kraken and its customers, and how have or will the products and services that Kraken offers change after getting the charter?
Yeah, I'll take those in reverse actually. So the end state ought to be that you can, you as an individual American internet and financial system user can go to kraken.com, log in, and immediately see your checking account balance, your savings account balance, your credit card balance, your Bitcoin balance, your Filecoin balance, and so on and so forth, all on the same screen. And soon, maybe even traditional securities, all on the same screen, so that you, as a user of consumer financial products, will see your entire financial world in one convenient place, and it'll work in the same way that you would expect a high performance crypto exchange to work. So you're not looking at code from 1998, right? You don't worry about it. You don't have to worry about a cascading style sheet not being compatible with your browser because it's trying to query like a COBOL system, right? We're not using systems that have been developed over the course of hundreds of years, like checks versus credit cards, right? This is technology that is This is a product that's going to be based on technology that was all built in the same decade at heart. So it will be faster. It will be smoother. There will be less. There'll be fewer weird rules around traditional banking of, wait, why do I have to wait 3 days for this transfer to work? You know, it's just not going to be the case anymore that there will be a fax machine between you and the person overseas that you're trying to send money to. And for law students that are watching, that's actually how international wire transfers work. They do not work today without a fax machine. That's the idea is that if we can build the same sorts of services on top of brand new technological rails and put them right in front of consumers, it's a very powerful product from a business perspective. It's also very exciting from a legal perspective, because you're turning over rocks that haven't been turned over in some cases decades. Yeah, in terms of like what is the motivation, in addition to wanting to build that spectacular product, if you look under the hood of how crypto exchanges work today, they're reliant on all these third parties that they just don't need to be reliant on. And there's this whole stack of interacting regulatory systems that really don't act to control risks that are real in this world. They act to control risks that have developed over 100 years for different technology stacks. Consumers are always going to be at risk of losing their money. The question is how, and how do we control for those risks best? Wyoming has put together a technology, a supervisory regime that actually uses crypto to regulate crypto. And I'm sure there's going to be more questions on this point, and I'll go into it later. And I've been talking for the last 10 minutes. So Georgia, please.
Yes, thank you. And yeah, Georgia, please feel free to jump in. Yeah, basically the same question.
Right. I think I kind of answered a big portion of this question in my previous response as to, the attractiveness of this licensure. But I guess in thinking about what this meant for our customers, I mean, it's kind of interesting. So before we were a federally chartered trust, we were a state chartered trust. And we provided, these core services to our clients. And the whole point of our application, frankly, was to not do anything new. It was just to take the services that we were providing as a state chartered trust and provide them on a federal level. And so we basically turned off the lights on January 18th as a state trust and turned them on January 19th as a federal trust. And it was a seamless sort of experience for our clients. I think, there was strategy in our application process by being able to show the OCC that we had a operating history and the ability to provide these services in a safe and sound manner, and that, they could trust that as we move forward, it was, that same suite of services and providing them, just with whatever uplifts were necessary for OCC compliance. And so that definitely helped with what we're doing. And I think for the foreseeable future, we intend to really just provide the services as set forth. I know we're going to get into the application process, which I have some stories about too, but that it's kind of a boring story, I guess. But, for our customers, it was just nothing happened. And for us, it's just that now we can service a much broader scope of potential customers and operate with the, it is a bit of a blessing and burden, right? So it's less of the intricacies of all the different state overlay, but it's also the OCC. It's like one of the most intense regulators in the world, but it's fine. And I'm actually looking forward to kind of sharing some information about that organization. So I will stop it there.
Sure, thank you both. That was super helpful indeed. So actually, so both of you have talked a little bit about how these two charters differ. And just a quick follow up on that. So what do you think makes one charter a better choice for one company in certain circumstances, considering their long-term goals of development? And what are some implications or trade-offs arising from that difference for some fintech companies?
Georgia, you want to go first this time?
Sure. So just kind of, we're mixing it up here. Just, kind of what I iterated before and Marco too. So the things that were important for us were, national and global reach, not having to do a state-by-state analysis, the ability to show our clients that we're regulated by the same regulator, the ability to show to potential clients that with respect to certain securities laws, we meet the criteria of a bank under those regulations. And those kind of things were just frankly essential to our operations. And that's why we chose the Federal Trust Charter. And that's what, is we're seeing this come to fruition now. The SPDI would not have worked for us. But again, we're a custodian. Marco is a different, custody is part of what he does, but he's also running an exchange. We importantly are not running an exchange. We will never run an exchange. And so that is, these are the types of things. You look at that business model, you think about, what you need to accomplish, what is most important to you, and then you map the regulatory overlay on top. You do not start with the regulatory overlay. That is the immediate kiss of death. I can guarantee you will not succeed if you are starting with your regulation and then you're building your business model around it. That is no good, no bueno. But I think, and I think what Marco, and I'm a little jealous, frankly, that he got to do was he got to be a part of kind of shaping what that regulatory overlay might be, because the SPDI is a newer, more novel sort of, regulation, and they had a business model or at least a vision, and they got to, kind of frame that. And that's pretty great versus, we're using a much older body of law that never really anticipated this type of asset class. And so it's been, we're learning and it's been a process, but I am so appreciative to the OCC for their open-mindedness and, the understanding that they have of this, of, digital assets and cryptocurrencies.
Yeah, I mean, to cut to it, right, it would be great if there was this single charter that would wrap up in a single, in a single pen stroke, federal preemption, no need to engage in lending, the ability to take deposits, but the option to engage in lending, either full or fractional reserve, and would also give access to the payments system. But at the same time, you didn't have to answer to just a single monolithic federal regulator that had, that was steeped in a century of old law that kind of maybe applies to you, and it's mostly left up to people's discretion. But no such thing exists. Laws are the product of politics, and it would be great if there was some. If it was just like a Mr. Potato Head of charter obligations and powers. It's not the world we live in, and we're never going to live in that world, right? We're always going to live in a world where states are arguing with federal regulators over what is and is not preempted, and we're always going to live in a world where the federal regulators are watching the state regulators just blow past them with innovative new charters, because that's just not how the federal system works in the US, and they couldn't even if they wanted to. So, in particular for the law students that are watching, like there really is no better or worse objectively. There is no right or wrong. You can walk into a room and say the word federal and people think, preemption, that's good. And then people who have lived under the federal system are thinking, yeah, and also one guy who has white hair and has worn a tie Monday through Friday for his whole life is going to decide whether I can launch this product or not. And you walk in a room and you say state, and people think, what, some backwater regulator in a shape that in a state that's shaped like a square? Come on, is that a real regulatory regime? Like, you take the good with the bad, right? You take the trade-offs, and a good lawyer, right, is not going to get caught up in like the ego and the prestige. They're going to get caught up in delivering on their clients' requirements and their needs, and that's what that's the take home today. Is that it's a rare day when you find a perfect fit. When you find a good fit, pop the champagne. That's a celebration.
Got it. Thank you both so much. That was really insightful indeed. So yeah, I mean, as Georgia mentioned, we do have questions about the application process coming up right now. And right, so we wondering what was the application process like? And we also wanted to ask about the regulatory process, but I'm guessing that there would be a lot of overlap in that, in these two processes. So, could you each of you tell us a little bit more about what are some challenges that you've encountered in the application process? What was it like? And how was your experience interacting with regulators in this process? So Georgia, do you want to start?
Sure. And yeah, I think you're right. Like the application process is actually part of the regulation. So it's kind of all mushed together. But to kind of set the table a little bit, like this is obviously not the first application that either of us have, ever undertaken with respect to the services and the companies that we work with. So, I've applied for many types of licenses, whether state money transmission or federal broker dealer or CFTC brokers or, New York trusts or state trusts. I have run the gamut. And I think what really stood out for me this time around was the level of awareness and understanding of cryptocurrency that the OCC staffers had. Like, it was the first time where like you walk in the first meeting and they're already asking you like very specific questions about, storage of cryptographic keys and hot and cold storage and, like things that basically, when I started years ago with other regulators, like you're talking about that like hours and hours into the discussion. It's not till you're reaching anything, at that level. And so it was apparent to us that this was an area of interest and an area of commitment that the OCC had. And so that just really set the process on the right foot to begin with. And then it was a intimidating process. It was, so they do what is called a pre-exam or a pre-license exam. There's like a fancy term for it, but basically they have a team of examiners with all different skill sets that come in and interview you. It was also bizarre because this is done during COVID. So everything was over like Zooms and calls and things. And like, there was like, it could be at any hour of the day because people were all spread all over. And so, it was a lot of man hours on the OCC side as well. So, this was like a significant undertaking, but it was over 40 hours of like examination and discussion and, kind of interrogation to a certain degree about our processes and procedures. We supplied over 1,500 pages of documentation with respect to, our processes, procedures, and, like kind of our prior operating history. There were certain levels and phases that we go through. What we ended up receiving is called a conditional approval. And that can take on different, different tones depending on what, like, for instance, there's a bank now that has a conditional approval, but they are not allowed to operate for another 18 months. We were very fortunate in that, and I think this has a lot to do with the fact that we had a prior operating history, but we were able to operate on day one. But we do have these conditions that we have to meet, and we have these milestones at 15, 30, 60, and 90 days that as long as we meet those conditions, we can maintain our charter and continue our operations. But it's also been a very close working relationship. So I am speaking with, a staff member or someone from the OCC daily, at least every other day. So like we have a very close working relationship. And, but again, I have been very impressed. Just like anecdotally, we had something come up a couple weeks ago where, as Marco mentioned, like we're turning over these rocks that have not been turned over in years and years. And like banking laws are some of the oldest laws in the country. And there's this concept of like an employee, right? And what can an employee do under the banking laws, and what are employees required to do? And obviously this statute never envisioned like the concept of AI or an automated system or, code running a smart contract. And so needing to have a real back it up and think about the spirit of the law and what are we like really trying to get here. Is it consumer protection? Is it efficiency? Is it what? And can we get there without necessarily having employees that are black letter, but providing services and systems and things in place that will give you those protections, but just in a novel and new, and tech forward sort of way. And the fact that we're able to have these conversations and they're not just like completely shutting us down to begin with has been so refreshing and really, frankly, exciting to be a part of.
Yeah, no, absolutely. I mean, it's this is a different reception than we got in 2013. This is a very different reception. I mean, I remember we went down to back after they published the very first guidance. If you're a law student, you got to study. It's in the guidance with a capital G. And if anyone's talking about the guidance, you know what guidance they're talking about in crypto. It came out in March of 2013, and it was not well received by the industry because back then the industry was, crazy Bitcoiners who are still crazy. That hasn't changed. And vocal. And, we were invited down to DC by FinCEN, and there was a room of every federal agency that could have any possible interest in this stuff. CIA, FBI, IRS, CFPB, SEC, CFTC. I mean, you name it. The whole room was filled with people who wanted to learn about Bitcoin. There was no crypto back then. It was just Bitcoin. And they 100% were shocked to see people in suits and ties show up. Shocked. They thought it was going to be like dudes wearing tutus with big neck beards, and like they were shocked at that. And then for 6 hours, we got there with a whiteboard and we were like, this is a UTXO. This is how mining works. Just like, what? This is sci-fi. And they left halfway through, and they would cycle in and out just because they would like tap their friend on the shoulder in the hallway and say, hey, get in there. You got to see this weird stuff. I mean, Georgia, you're right. We have come a long way as an industry, both in the work that we've done, engaging with regulators and closing the knowledge gap. But also, like as an industry, just spreading the mind virus. I mean, the mind virus that's infected, right? It's infected regulators. This is the wrong language to use, but really, but it's real. Like this is how it happens, right? It happens like a virus. It spreads like a meme. It's mimetic, and it spreads among the common folk like us, but also those on high in DC, it has spread, and that's the most important thing, is that we had somebody like Brian Brooks in the OCC who was forward-thinking enough to push this stuff on the agenda and say, we really have to give this stuff serious thought. This is happening, whether the stodgy are among us like it or not. This is happening, and we as a forward-thinking regulator need to be prepared for it. The same thing happened in Wyoming. in that, we didn't start the process. We were brought in as SMEs on some of this stuff, not all of it, but on some of the technological stuff. We were brought in, and they wanted to know, look, what are the powers that that banks need to build successful products in crypto? What are the limitations that we can place on that will still create a commercially viable product, but control for the risks that are real? And that led to a conversation around, well, what are the technological changes that lead to different kinds of risks, and how do we control for those? And we came to something that was, we came to find a license that had been prepared by these regulators that was incredibly thoughtful, a supervisory regime that was incredibly robust, not because it's tough regulation. Regulated people always love to brag about how tough their regulation is, and they like humble brag about it. It's the weirdest thing, and I'm not immune from it either. I do it too. But what really impresses me about Wyoming's regulation is just that it's tough and it controls for the risks, but that it's smart. It controls for new risks in better ways by using blockchain surveillance. But anyway, there's a lot to talk about in Wyoming.
Yeah, I mean, those are definitely fantastic insights about the development of regulation. So now that we have already talked about how the general regulatory environment developed for fintech in the past few years, we want to get your thoughts on how this area and especially regulation might develop in the future. So a few questions that we have would include, would you expect any changes with the new administration? How amenable are these charters to potential future changes or technological innovations? And do you have any advice for how to navigate uncharted territory with respect to novel technology? So, we would love to hear your thoughts on any of those questions. Georgia, do you want to start on that?
Sure. I mean, I think what I am learning with respect to this federal charter is that there actually is a lot of room for flexibility. Because again, remember, these are prudential regulators where you give them a business plan, right? And they're not approving just like, oh, you can, custody, you can do it, whatever. They're approving this business plan as a whole. And you can work with them over time to modify and develop and change. And I think that it is becoming more of a fluid process. Now, you mentioned with respect to changing administration, we're still not sure who's coming into the office. It's a little up in the air, but that will, to a certain degree, have an effect, right? Like Brian was able to have a huge influence, and that was obviously great for our industry. But the one thing to remember about a lot of these agencies are that the staff doesn't really change that much. Like our examiners have been at the OCC for 20 years or more, some more. So that part of it, while they'll get their mandates coming down, the actual staffers, they're devoted to this, and they have built their career here. And so I'm not super worried about, that kind of staff level. I am to a certain degree concerned about what's the tone from the top going to be, what's that overarching message going to be. It's really neat though, the way that Brian implemented his kind of change in the institution is he did it through interpretive guidance of pre-existing rules. It's not like he passed a bunch of new regulations or proposed a bunch of new regulations. He just basically interpreted existing law in a way that was, helpful, but isn't inaccurate or inconsistent, And so it's kind of hard to just overturn, guidance and interpretation. Because I don't know, it was just very elegant in my opinion, the way that he framed the analysis and the potential shift, versus if you'd come in guns blazing and say, we need new laws, we got to change things, that ruffles a lot more feathers and frankly is easier to revoke or overturn, certainly so late in an administration. So I guess that's a long-winded way of saying I'm a little worried. I'm not like super worried. I am able to sleep, so that's good. I mean, there's other reasons maybe I won't sleep, but it's not the current charter and our status there. And just as far as like innovation and things happening, like it will find a way. This is like life. Like crypto is going to find a way. You can't just like put your head in the sand and pretend like it's going to go away anytime soon. That's just not happening. And so it really behooves our regulators to understand the technology and figure it out and get their arms around it, because, if they don't, potentially really negative things can happen. And I mean, there's a whole parade of horribles that could happen. I'm not going to go into it, but this is what regulators are for, frankly.
Yeah, I would say that the things that really get my gears turning about over the next few years of regulation, I think that Facebook's Libra or DM or whatever they're calling it this week is a catalyst for really fearful thinking across DC, and it is competition from the private sector in the world of money that is very different from the competition that open permissionless blockchains give. Unfortunately, it's all going to get looped together in some of the worst ways. And the problems and consequences of something like Libra coming to pass are going to reflect on all of the circumstances that come with something like hyper-Bitcoinization or crypto being used more broadly. And it's going to slow us down, unfortunately. That's the unfortunate reality of it. We're going to be looped in with them. And all the problems that they cause are going to be projected onto us. We're going to have to deal with it. I think that probably the bigger regulatory developments will be around secondary markets like us. I think there will probably be a comprehensive secondary market regime for crypto trading. I don't think we get through this administration without a new comprehensive regime, probably coming from the SEC under Gensler. I think he's probably going to do the same thing with SEC, which that he did at CFTC, and bring this industry, wrestle it away from all the other places it could go, like into the banking laws. I think it's going to wrestle it into the securities laws and really do as much as he can with the investment aspects of this, as opposed to the medium of exchange, store of value aspects of it. And I think we should expect to see much more robust securities laws around secondary markets under Gensler.
Thank you both so much. Now I'm just going to open up for a Q&A from the audience, and we've received so many great questions from the audience. So one question was there any particular concerns expressed by regulators about privacy coins? How did you address it? And I mean, feel free to jump in if you have encountered that.
Yeah, this is always a topic of conversation, frankly, with all of the regulators, or at least the ones that are savvy enough to know what a privacy coin is. And so, we don't really participate in, the networks, or at least the privacy aspect of those networks. So, to date, we've kind of not really had to address that. And we simply are able to say that, we run AML KYC on our clients, and we know who we're dealing with. And when they're transacting with us, it's, they're not utilizing the privacy aspect of that asset. And similarly, when they, transmit these assets, we get information as to where it's going. And, that's, we're a plain vanilla over here. We're not doing crazy stuff. So, that's just not something that we've had to do, but it's definitely on the minds of the regulators.
Great, thank you. And actually another question for Marco. With the Wyoming bank charter, with third-party services that you were relying on, will you not be relying on anymore? And for the stuff that you don't need third parties anymore, would you build in-house?
Yeah, well, so first and foremost, the objective, well, not but one of the major objectives in terms of eliminating third parties from our value stack is getting rid of the third party banks, right? An exchange is fancy software built on top of a bank. That's like the story of fintech since people started using the portmanteau fintech, right? That's what it is that we do here, is we like build stuff on top of banks. Unless you can be your own bank, which is a registered trademark that I registered for a client a little while ago, and I'm very proud of, because we can actually be our own bank at Kraken in the most literal way. But that's the primary third party that we would disintermediate. There are trade-offs though, right? Because now we need to bring on other third parties, like core banking software. I mean, we could build our own core banking software. We have elements of that. At the same time, there exists software out there, so maybe we should consider contracting with a third party to buy their software to run our bank, which is a weird thing for what is essentially a software company to say. But I guess the difference then would be that software company is built on top of us and we're the bank, as opposed to the other way around. It's a brave new world there.
You got very meta.
So meta. So meta.
Thank you. We have around 5 minutes for one last question to you both. So this question is, how can law students and recent graduates get involved with crypto institutions? What skills are most valuable to crypto institutions? Georgia, do you want to start?
Sure. So we take interns, just FYI, but I think that the best thing to do is it's a very welcoming community, I think. And there's a lot of resources out there. I think just learn, find out what you're excited about, reach out to different entities or institutions. One thing that is I know Marco can appreciate this. We are very busy. We are all very busy, especially this is crazy time right now to be in this industry. So what is not helpful is just reaching out and be like, hey, I'm in law school and I'm interested. Have a point of view. If you want to get our attention, write something cool. Write about something you're passionate about, or a question you have, or something that you'd like to work on. Go a little further and show us a little something about who you are, because I don't have time to get on a call and chit chat with you for a while and learn if you're nice or not or whatever. But if you've got a point of view and you're passionate, I want to know you. I want to get to know, I want to see what you're about. So that's the advice I give on that front. And then the qualities that are really necessary here are flexibility of thought. So what you need to be able to do is take a black letter statute that was written 100 years ago and think about how you can map that on to this brand new technology. Because what we're not going to be able to have is a complete revolution and brand new laws written just special for us. I mean, Marco aside, but for the most part, because there's a whole lot more laws that are out there than just banking regulatory laws, right? There's a host of other things that you have to be thinking about. And all those laws were drafted without contemplation of cryptocurrencies. And so we need people who can take the old, the archaic, it's not even archaic, that's not fair, but the old laws and flexibly apply them to this new technology in a way that gets you comfortable with the spirit of the law. And maybe if you can come up with some clever, legal arguments with the letter of the law as well. So, that's just something that I would really kind of impart as if you're thinking about embarking on, a career in this industry.
Yeah, Georgia dropping truth bombs. Absolutely. I'll tell you, in terms of how you get, just speaking practically, how you get involved, there's really no faking it. You need to understand the technology sufficiently to develop sophisticated opinions about it. And then those opinions better damn well be provocative, or you're not going to get anybody's attention. That's that's like the last 8 years of my life in a nutshell, right? Is say provocative things, but they're not just emotionally provocative, they're like thoughtfully provocative, at least the ones that got people's attention for me. And you know, you don't have to write like law review articles. I don't even know if I've read a law review article in the last 8 years. But you know what I have read? A lot of Twitter. And that costs you nothing. Drop truth bombs on Twitter. Say something, say true, provocative, thoughtful things on Twitter, where that Venn diagram overlaps is incredibly accessible. Anybody can do it. It costs you nothing to hit at msantoriesq on Twitter, and I guarantee you I will read whatever you write. I can't guarantee what you write will be good, but I mean, you got 280 characters now. You can do a world with that. It's incredibly accessible. It's incredibly democratizing, but you have to show leg, right? You have to show what you know. And there's otherwise really no faking it. But I got to say, you can't play it safe if you're trying to if you're trying to make your way into something new. If you're trying to break into something new, you have to acknowledge the risk that you're going to say something that upsets somebody. Otherwise, you're not risking anything, and you have nothing else. You have very little else to give besides your risk taking when you're trying to do it for the first time.
Got it. Thank you both so much. And it was a really great time speaking with you both. Thank you so much for being here with us today. And just a preview for our audiences for the next panel. The next panel will start at 1 p.m. Eastern time. We'll be talking about venture capitals and institutional investment. Thank you, Mark and Georgia, again for joining us today. And we look forward to staying in touch and seeing you again probably soon. Thank you.
Thank you.